Alrighty guys, let us get on. This is recorded right now. Just set up the recorder and we can kick off. So welcome tonight on Trade Talk for the Enigma newbies. Rightio. My name is Matt Shaw. I have now taken the realms here on these Trade Talk sessions. Myself, I've been involved with Knightsbridge Trading Academy for some years now. Done a lot of work together over the last 4 to 5 years, and I'm the chief analyst and have been for the last 2.5 years. I've traded with a hedge fund in 2014, 2015, 2016, I should say. The $1 billion hedge fund. I was trading one of their SPVs for nearly a year, and then came out of that just to do my own trading, purely because it was quite stressful, and I could actually make 3/4 of the money I was making there by myself. So I just thought, well, you know what, I'll take that little less money and have a better quality of life. So that's what I chose to do. We've done really well over that period, actually. I decided not to carry on to move, which is what the board wanted me to do, and I wasn't prepared to make the move, to be honest. I have a young family and I don't really want to move to another country right now. Anyway, so that's where we are. That's who I am. Been trading over 20 years since I left college, back in the days of the tech bubble and tech bubble that burst in 2000. I remember it very well. We've gone through obviously a recession since then as well, and maybe entering another one, who knows? But we're going to go through this now the next few weeks. Regular updates. We're going to check out the Brexit process, whatever people think about it. We're all split on that, I think. Many think, Boris is trumpeting some sort of fake success. Obviously, Theresa May's wrapped up deal with a different bow on. But we'll see, and might not even get this vote through on Saturday. It's looking very, 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 very doubtful indeed. So there's going to be some leveling off for pound almost. So we're going to go through some of the pound pairs. We're going to go through many other pairs. We're going to look at gold and silver as well, and also the indexes. But a lot of onus has been on pound this week because there's been a lot of build up. It's sort of buy the rumor, sell the fact type shift that we've seen, and it's sort of come to pay as well. We've banked some good profits on pound this week, but we've been very light on trades, and that's what we wanted to do, purely because it's topsy-turvy right now, and the markets are trading still overall for indexes. They're leveling off now, and also the currency, especially the pound pairs, they have seemingly broken up, but we have some rapid reversals very quick, especially in pound kiwi, pound yen, so on and so forth. So we're going to go through these now and check them out. So the first one we're going to look at, I think you can see my screen. If not, okay, I'm going to share it right now. You should be able to see it right about now. If not, please let me know. Okay, excuse me, that's my screensaver. Apologies, guys. Righty, okay, so I've got a very small trade on right now. Got a very small trade on, just went long euro dollar earlier today upon a slight breakout. I was going to start with euro dollar actually. After all, euro dollar is the most liquid pair in the world. Euros and dollars obviously make up the most traded currencies in the world, apart from Yuan, but together they are the most liquid pair in the world. So euro and dollar with a nice breakout. I've got some leveling off here, got some DeMarca lines looking at the last previous highs going on here. We're going to look at Elliott wave, Fibonacci, guys, over the next few weeks. Fibonacci, Elliott wave, some RSI stuff, RSI MACDs. We're going to go through many technical indicators, but we're just going to look at some moving averages and basic DeMarcas tonight. Just basic stuff, not going to go too heavy on a Friday night. All right, where we are, dashboard. I'm just getting used to GoToWebinar as well. I'm used to GoToMeeting myself. So I'm just going to get the pens up. Here we go, that's what I wanted. Right, so okay, so the moving averages I've got here are the 110, 18, and 55 day. Okay, we can see a nice breakout here. Since the last time it broke down through this level, it attempted that level once more, so that 110 level, 110.80 level, it sold back off to prior support, which is now depicted on this lower DeMark level here. And we've rallied back since, picking up momentum above the 18-day, 55-day, and now ensuing up above the 110, this golden moving average here, the 110 moving average. That's what we've got there. We've got the 55 here, and we've got the 18 here. So for me, I've got in quite late in the day. I was looking at this earlier on. I've actually traded it and banked a profit when it got up to around this level here. I bailed out, expecting maybe a sell-off from previous highs around that 110.60 level. I'm just going to delete those a sec, but I wouldn't have been surprised had we have seen a sell-off from this level here. You know, got the green sloping DeMarker here. So I got out of my previous trade there, but we've carried on now, and I got in when we got up through the 110 moving average here today. It closed above it and then opened and carried on above it today. So I thought, you know what, I'll get in again. It's looking bullish and it's looking strong, stronger than it is weak. And now we're sort of above those previous highs set in August, sort of the third week of August, around there, which is pretty much 111.50, and that's where we are now. 111.40 actually we got to last time, 111.45, and now we're just above 111.57. Looking to break out above 111.65. So I'm just going to keep my stop losses in play, about sort of 120 pips, 110 pips down in stop loss. I'm not even 13, 14 pips in profit. I'm just going to leave that. My stop loss is in play. I'm happy with that. I'm going to leave that run. All right, so that's where I am on euro dollar, and that's the reasoning for getting in. And basically, all I've got from there, apart from price action itself, building up over the last few, making a bottom at that level depicted by the DeMarker that's now come in there. We came back, hit a trend off the 18-day moving average, built back up, and once we got above the levels here, we really made a shift in momentum. And again, it's not much, it's 150 pips over the last week. It's not a great amount, but still, it's half decent. It's a very lame move in comparison to sort of pound kiwi, pound yen, what we've seen recently, but it's something that's sort of solid, and it's got good liquidity, and it's something that will just be a slow burner in the background, because we have indeed hit those sort of 114 levels over the past few months, back towards the end of June, just before I moved out. It's been a hectic summer for me, and we've come off 400 pips back to that 1150 level now. So this is where the market will target. Now it's above the 110 moving average. If it can hold above there into next week, 113, 114. Obviously, it all depends about Saturday, how it's taken by the market Monday morning in regards to the vote in being put forward to Parliament. So, but it's encouraging how it's built back up above the moving averages. It hasn't just shot up, it's built momentum, and it's we've not just seen one huge candle of 200-300 pips. It's what I like about it. It's been moving in phases. It consolidates, moves up, consolidates, moves up, and now we're here again. Maybe it will consolidate here again before its next run up, and we'll see into Monday. Again, we will see what happens Sunday in Parliament. It's going to be quite excited. British politics, not known for being exciting, but it's kind of on a knife edge at the moment, isn't it? I'm going to go on the pound kiwi because it's been a huge one. We banked a nice, pretty much nearly 200 pips on this week. Some of you might go in different levels. I know I got one message saying you made 450 pips, which is great. But on the group, we got out at 190. We managed to bank 190 on that. Forget what that was. I didn't do that on this account, I don't think. What did I get here? I'm going to go down for recent ones. What did I get? Did we get that? I don't think I placed that on this account, actually. Was that was euro yen? That was a different. I'll go back to euro yen shortly. Right, okay, so pound kiwi. Pound kiwi, again, basing out here on these bottom of the 18-day 110 day, as you can see here. I'm just going to, can't zoom in anymore, but right here you can see the cluster of the moving averages. We had the 18 cross above the 15-day, moving upwards, which is good, which is bullish. And then again, it moved up while the 110 was slightly moving up. It wasn't moving lower, it was moving up. The 18-day crossed above the 110, and since then, it's carved out a base and it's rallied up. And as you can see here, as this gap widened, this provided the energy for the market to make one final low before a huge rally higher. And these technical setups always preempt large moves. It's like as if it's a divine sort of presence where the market, it defines all forms of logic and all the laws of the universe in the FX world. The technical picture usually tells us what it intends to do. Market gives us advanced warnings, and it's renowned for that. But after leveling off at around 190 here, we did come back off. That level was around 194 onto the 2 moving averages and the DeMarca line there, so the 110-ish, just above 55-day moving average, and that DeMarca trend. And we've got one of our DeMarca arrows popped up here, and from there, look at that, just a beautiful move over 1,000 pips. We've banked a few hundred, 150, 200 euro in there a couple of times, and on the group we had 190 of this. I forget what we got in on the group, 20, just above, was it just $2.20 or 201.20? I forget now. It's on my other account. I've got it on this computer. But it was, I think you can double check on the group, guys. But then, yeah, we closed it out. We should have carried it on another 100, 200 pips. But some of you did stay in. You raised your stops up to break even and carried it on. So well done. Yeah, some of you have made over 350 pips there, solid at least. Some of you maybe more. So we're going to come out of that. Where we're going to see now, again, it's consolidating. It's moved up over 1,000 pips in less than a week, in just over a week. So it's very tentative now what's going to happen in Parliament on the weekend. I wouldn't be surprised to see a bit of a sell-off from here, maybe carve out a higher support before another rally ensues later on this month or early next month, once this Brexit date is established one way or another. So we'll see on that. I'm on the fence. I can't give anything. None of this, what I say, can be construed as advice. So please don't take it as that. But for me, we're at a massive resistance level here at 20, just below 20, sort of 205.50. So that's 550 pips above 2 New Zealand dollars to the pound. So as soon as it broke that $2 level, which is pretty much there, the market really shot up, and now it's finding its feet here. So we might fluctuate here before it breaks out one way or another in the next week or so, maybe even after Brexit, but we'll see. Yeah, but obviously if this is not in, if this date doesn't get moved, it could be a no-deal Brexit, but we'll see. We'll see what happens in Parliament Saturday. It's going to be very interesting indeed, isn't it? Very interesting. Right, moving on. What else we got here? Pound dollar, very similar to pound kiwi. It's practically, it mirrors that chart, doesn't it? We had a base carve out here, right here, rally up, back to some support here, some base support on the DeMarca trend, just below the moving averages. And as soon as we got back above that moving average, 123, 124, we've motored on towards, amazingly, 129, 129.50, towards that 130 level. And notably, the 130 level has been it's been an absolute sticking point for years now, not just months, but several years since the Brexit vote. It's been, well, somewhat of an enigma. You can see here, it's sort of on the shoulder, this 130 point. If I just carve through here, 130, where that is, you can see it's a median line here going through. Actually, I'm just gonna look at that, where that's set. That's pretty much 130 there, these red lines here. All right, so the red line's going through that chart right the way through. You can see how it literally at these sticking points. It's been a psychological level in and around the market bouncing off here, seen as support, then resistance. Huge movements in and around 130, and now this is where we're back to. It's been the sticking point 5, 6, 7, 8 times over the last here, but it looks like a king spider, doesn't it? We've got the head here, we've got the shoulder, we've got the shoulder. It's a massive, gigantic head and shoulders pattern. So with this test now, we're either going to rally into orbit or we're going to sell off back below the lows of the Brexit, which is obviously just below that 120 level, 118 there. So we will see firm support there around 120 as we've witnessed in middle of August. We saw market rally up, but we'll see where we are. And we're going to find out pretty soon, guys, in the next 10 to 15 days. Less than 2 weeks now, maybe even Monday, Tuesday, pretty much its intentions. But 130, we're back there, and it's a huge, huge level. All right, I've had mixed success with it personally over the last 3 years, 3+ years. I've sold it just at the wrong times. I've caught it perfectly. I've exited when, you know, we've got back to 130. I think I got out one of the times. I forget when it was. It was late 17, I'm sure it was. Or I might have got in at 130 when we broke here. Then maybe it was August, September here. So one of my spread betting accounts and managed to get back in as it broke and rode that. I got out far too early. I got it around 136, I think. But market went on to 141. Better to get out too early than too late. 142 it actually touched just above before it then sold back off over the preceding months into 2018. Down towards again that 130 level, rallied below, sold off below it, back above it, back below it, back above it, hovered in and around there for several weeks, a couple of months actually, and then broke and died below it down towards that 120 level over the last 6 months from April to October, and that's where we are now. So 130, massive level for pound dollar. Keep an eye on that level for obviously, well, major resistance at the moment because we're trading 56 pips below that point. Going to look at dollar yen, guys, and I'm going to quickly look at pound yen and then just look at a few indices. Going to get on. I know obviously there's only 1 or 2 of you in tonight actually, so we'll just make the most of it. It's being recorded so you can watch it in your own good time over the weekend. Pound yen, let's go on a daily. We'll zoom in here. Again, not a mirror image of pound dollar and pound kiwi, but similar, isn't it? It's had that bounce up. We've got a nice blue arrow demarker there. As soon as it got above the 2 moving averages, we've now pounced above and hit a roadblock at the demarker trend. These levels here, 108.70. So we'll see now from Parliament to the vote, where's it going to go? We're going to head back towards that 107 level and below. We're going to break out above 109 and head back above 110. So we shall see. Oh, sorry, this is dollar yen. In my head, I was thinking pound yen. Apologies, guys. Dollar yen. Yes, again, I mean, how good is this trade war? These trade talks? These will be factored in over the coming weeks, and we'll have a lot more traction, I think, on dollar. Dollar index a little bit down today. Obviously, it's suffering a little bit today. I think it's about 0.3% today so far, and obviously the counter pairs like euro dollar, pound dollar gaining on those. Gold's off slightly as well, but that doesn't really mean anything. It's practically flat, so I can't really tell anything from there. But for me, we have got some major resistance in and around these levels. I'm just going to zoom out. As you can see, again, notably, just like pound dollar at 130, we've got these notable highs at around this 109 level. Okay, so again, we're at practically a triple top. Huge deal there. Look how straight I managed to get that line. So yeah, are we heading back down towards these levels? or we're going to break out on this. We will probably, again, like the timing of pound and Brexit, find out in the next sort of 7 to 12 days or so, and then we should have more confirmation. It's going to be exciting to trade because there's a lot of trades, a lot of pairs right now, several pairs that are building and building traction, setting up for big moves, like we've seen with pound dollar, pound Kiwi. Pound yen. This is what I thought I was already looking at. So let's just zoom in slightly again there. Again, mirror image to pound Kiwi, pound dollar. I thought that was weird, how the last one didn't look like pound Kiwi, pound dollar. I've not got a DeMarco arrow. It sort of preempted this a few days before the move, but we've got a bounce back to DeMarco trend and then a lovely, lovely bounce again. 800-900 pips. Excellent move. And pound's just an extraordinarily well, isn't it? It's leaving me a bit skeptical, I'm honest. Is this a dead market? Sorry, a dead cat bounce here? I know it's just a major bear market rally, which it could be. Don't forget, the biggest rallies do come in a bear market, so it's something we've got to watch and be careful of. All right, it's a way of sucking people in on the long side just to then sell off short again and make a lot of money on the short side for the institutions, for the banks, etc. Bear in mind they might already be edging positions for the weekend, so any trades now, I would stay well away, guys, and await things on Monday and later on Monday as well, for the market to digest everything in the morning, and obviously the Asian session through Sunday night. So it's going to be extremely interesting. We're at, again, 140, huge psychological level for pound for pound yen. Back in only in May, just a couple of months ago, guys, we were there, but we sold off. Pound had that awful run down, didn't it? Just when pound dollar went down to 120, we got pound yen down to 126, and then we've seen a huge comeback since, back towards those levels. So again, 140, major sticking point. Will we head up towards that 150 level where it once was, again, back 7-8 months ago, or we're going to head back lower if Parliament doesn't go its way? There's a hard Brexit deal, no Brexit, sorry, no deal for Brexit. That could look pretty serious for the bulls on there, but we will see again in the next week or so. Again, build up. I'm excited because things are building here. All right, traded in some quite poignant times. The 2008 crash. Flash crashes have gone through. 2015, 2016 sell-off. I was trading with a hedge fund when markets went AWOL at the start of 2016. Rallies into late 2017. Obviously, the tech bubble. I mentioned that before. And these times, give me the butterflies, and I'm feeling that now. It's starting to rear itself in me, and it's a quiet excitement. I'm not getting erratic about it, but you can't really take advantage of these opportunities if you get ahead of yourself. So it's all about kicking back and chilling out and biding your time, sort of like a leopard, with that Mark Weinstein quote, a sick, lame antelope just on the plains, and you just bide in your time until he's so sick and he's hovering around starving you, then you pounce when you're assured of the catch. And that's like in the markets, and I love that quote of Mark Weinstein. I'm not going to say it word for word, but you get the picture of what I mean. Right, dollar. Okay, so we've seen a lovely rally up. 1365 was a major sticking point, major high going into the elections, when the market sold off, when XAU USD sold off just after Trump got in, which many thought it was going to carry on rallying, but it was actually the other way, and markets also bottomed out and started rallying from there. But gold sold off back to the 12s and then came back and made highs towards that 1365 level again. But it's been a sticking point for quite a while. And let me just show you just how long that is. Right here, go back some more. Go back quite a while. Let's go on a weekly. If you can see here, look at that line right here, right there, 1360. levels in here, around there several times the market, and just about 1345 there. And then look where when it broke above that level again, sort of that quadruple high. It's not a straight line, apologies. We got above there and the market absolutely went crazy up towards that 1550 level, which is the new 1365 in terms of resistance. Okay, so that's what we've got to watch out for again over the coming weeks as a target, 1550. All right, so we're at 1490. If we can't make any headway there, again, trade talks, you know, going into the election, interest rates, inflation in the US, that's what they're looking at. And it's all important, you know, the Fed, in certain terms of what they've done, they've blocked themselves into a corner where they can't really raise rates too much, yet they can't really drop them too much into negative territory. They've got to keep inflation around that just above 2%, but it's just not really going anywhere. It's quite scary considering inflation is at the level it's at and where interest rates are at, and the debt bubble as well. So it's scary. So this is all good for gold. But what I don't like about gold's near-term chart is that it's made highs at 1550, fresh 7-year highs, but it's made lower highs since in and around these levels. So this is where we are now. If we can't make any gains above 1500, we will be heading back to lower support over the coming week or 2 weeks. And that's all we want to look ahead for. We don't want to look too far ahead just yet. So that is that there. All right, guys, I'm not going to go into any more detail on that. I'm just going to look at the Dow right now. I'm going to end off with the Dow, guys. You want to get on. It's a Friday night, and don't blame me for wanting to get on. I'm going to check this out here. Again, markets, look at over this, over the weekly chart. Again, fresh highs over the last few weeks, or attempting those highs. Back in late 2017, it got above 26.6, 26.1. Then we broke that 27 level this year, didn't we? Back above finally, and now we've made lower highs since. So I'm a bit perturbed about that, it has to be said, about these lower highs. We can't seem to really get any higher than this level here, 27.3, 27.2, and now this is where we are. So if we can't really break out above 27.3, we could head back to the bottom of the range of 26.6, 26.5, and God forbid if that breaks, we're looking at a near-term target of about 24,000 on the Dow, which would equate to around a 10% sell-off, which would be a natural correction anywhere between 10 and 15% in a bull market, for then the market to then come from there, bounce and maybe hit new highs into next year. So that would be a natural process for the bull market to continue. But again, we'll see over the coming week to 10 days just how much really of a ripple effect Brexit is going to give off. So we'll leave it there, guys. It's an interesting one. It's going to play over the next 7 to 10 days for sure. And happy trading. I do apologize for cancelling this week so far. We've done one tonight. I hope you enjoy the recording, but please get on, enjoy the weekend, and I'll see you back here fresh next week, and we will crack on then. All right, guys, God bless, take care, and I'll see you really soon. Bye-bye.